Now, let's talk a little bit more about that hedge against inflation aspect that I was talking to a little bit earlier. As inflation goes up, the price of the real estate and the cost to duplicate that property, if you were going to buy the same property, will increase with inflation. So when you buy real estate at a certain point in time, that real estate will continue to go up, but you've locked yourself in at that purchase price and that loan. Okay. And apartment leases are set 1 month to 1 year, either if it's month to month or if we've got 1 year in leases. And every time that a lease turns over in an apartment complex that's got many, many units, you can slowly inch up the average rent of the entire building over time, over that 1 year, even the year that you've taken over the complex and you bought it from the previous seller. That way, it's easier for you to keep up with inflation. Whereas if you have a single house or a single family house, you have one tenant and it's basically a negotiation as to whether or not you can get the increased rent. And if they don't go for it, then they're probably going to leave, or they're going to get back at you somehow by either not paying the rent or damaging the property or so on and so forth. But by using an apartment complex, you have a lot of different units that come vacant and you can test the market to see what makes sense in terms of rental increases. And then, of course, when you increase the rents, you are increasing the value of your building. And let's talk about how that actually works. So most real estate investments in multifamily, and actually all of them, I should say, profit through increasing your net operating income. Your net operating income is basically your appreciation and equity gains encapsulated into one little term. And the net operating income is based on the income minus the expenses that come into the building. So if you're able to take the net operating income, again, which is income minus expenses, that equals your net profits before paying your debt, then to increase your profits, you need to decrease your expenses, or you need to increase your income. So when we're looking for apartment complexes, these are the two things that we look for opportunity in. We look for places to be able to decrease expenses and also increase the rental income without even lifting a finger. In addition to that, we would be able to increase the profit and the appreciation gains by paying down the mortgage payment as well. But that has less to do with forced appreciation than what we were talking about before. You can do property improvements, which will also reduce the cap rate. We'll get into that a little bit later on, but that's also one other way to increase the value of the building. But in a roundabout way, when you increase the property's amenities, then you should be able to command a little bit higher rental income than any expenses that it also brings with it, ideally. And so as we were talking about, adding amenities and fixing the property up are two important things. And then billing back utilities. Some apartment complexes that are mismanaged right now do not have what's called a RUB system, or a ratio utility billing system, in which the landlords charge back about $20 to $30 per month per tenant, or some flat fixed fee to all of the tenants in order to recoup for one master water meter that usually is in place for most apartment buildings. So if the current landlord is not charging that and is building it into the rent, odds are if you go in and take over the property and then charge a little bit extra for the water bill, most tenants won't disagree with the $20 to $25 increase in utility payments to help pitch in for some of the water that they use on a monthly basis. And so that's one way to help bring up the net operating income. And then the other thing is that we're looking for organic growth in growing markets. Growing markets means increasing rental income and more responsiveness to any types of improvements or amenities that you add, meaning that if you add an amenity, then it'll fetch more in rental income. Those are things that we look for in markets and in properties that we're trying to buy.